So I think today we are going to really hit home with a lot of you and what you're currently experiencing in running your business. I want to talk about the real issue that goes along with payroll tax liabilities, and one that I had to learn kind of the hard way. I'm Jim Flauaus, rhymes with house. I am authorized by the U.S. government to represent taxpayers before the IRS. I want to talk today about what a lot of tax relief or tax resolution professionals don't really address, and that's payroll tax problems. Did you know that 71% of the revenue that the IRS collects isn't income taxes, it's payroll taxes? And here's why this hits home. You run a small business, and if you do, every day is kind of like managing by the bank balance, right? Especially in this economy. We're at a time where suppliers are raising their prices on materials, customers are slow paying or no paying, and we as business owners are kind of caught in the middle, right? We're trying to manage the cash flow. We look out there, we need revenue this week, so what do? Well, we need work done. We need projects completed to get into the customer's hands so the client can pay us the money we need to keep the business moving. So what's all this got to do with payroll taxes? Here's why. Payroll taxes are one of those bills that comes up every week while you're sitting there looking at, well, the need to pay your supplier, the need to pay your employees. And so it's like, do I pay my supplier and my employees this week so that I can get some more revenue? Or do I pay the IRS at the risk of maybe the whole business shutting down because I just don't have the cash flow to continue? That's the reality facing many contractors, many small business owners, many transportation and trucking owners. You're in that crux right now where paying the payroll taxes can be an issue. And here's why it's really the big issue. The big issue is you can become personally liable for any payroll taxes that your business does not pay. So let me put that into perspective. A year from now, your business is closed, it's gone, the IRS can't get any money from the business anymore. But you as an individual, you're still there. And under your Social Security number on your individual IRS account is the liability for what's called the trust fund portion of those payroll taxes. And this can get big, depending on whether I don't know what size business you own, right? I work with many realtors. The realtor and their spouse are the only two employees rather, in the business. So payroll's not big, but it still could be 100, 200 grand a year. Or I work with many contractors. Maybe they have 5 employees, 10 employees. So what exactly is the trust fund portion? So to explain that, let me just unpack where payroll problems come in. The first payroll tax problem is that you don't file the proper forms, right? You have to file a Form 941, you have to file a Form 940. And why don't you file them? Well, because payroll filing deadlines are confusing, payroll tax forms are confusing. Maybe you're running a QuickBooks payroll subscription where you have some leeway as to maybe you can pay your employees, but you don't necessarily have to pay the taxes right then. So you kind of slow pay on the taxes or defer them. But in the meantime, you're not filing the forms. That's number one. The second problem, is that you're not paying the deposits. So understand, filing forms and making the payroll deposits are two separate issues. They both can generate IRS problems. If you don't file the forms, well, that's relatively easy. My recommendation is, if you don't know the deadlines, don't understand the forms, you get intimidated, frustrated, trying to get all this together because you don't know what the IRS is looking for, you don't understand the deadlines, hire a payroll service. You might pay them a few hundred a year. They can save you thousands in terms of penalties and interest and IRS headaches. But the other problem would be you're not making the payroll deposits. Now, why are you not doing that? Well, for the reason I described earlier. You're in a cash flow crunch, perhaps. Or maybe you have the money, but you're just so busy putting out fires and tending to the day-to-day business that you're just not paying attention to the payroll deposit deadlines, so you miss one. That's where the problem comes in. That's where you can be liable personally for the payroll taxes. And let's face it, you do this once, you defer it because you feel like, well, I'm going to come up with the money, I'll have it for the next payroll, And when the next payroll taxes are due, I'll double up because I'll have some projects done. I'll have some supplies that I need to buy. I'll have my employees get the work done. We'll get the revenue in. We'll take care of this. Unfortunately, then the next pay date comes, maybe 2 weeks or 4 weeks away. Maybe things aren't taken care of in terms of cash flow, and you defer it again. And where this really gets into problems is if you defer a handful of times, or a half dozen, even a dozen times, where you now are 6 months into non-payment of payroll taxes. Well, you could have $100,000 in payroll taxes that are due, and you could have $60,000 of that as what's called the trust fund portion, which you can be personally liable for. What's the trust fund portion? Funds that you withheld from employees for their federal tax payment withholdings, for their Social Security, and for their Medicare. That's the trust fund portion. It's the money that your employees entrusted to you. They were counting on the fact that you were going to send it on whatever way you were supposed to the IRS, so that when they get their W-2 at year end, all the money is going to not only have been withheld, but have been paid in. You're holding those funds in trust. And if you don't make your IRS payroll tax payments, really, in fact, what you're doing is you're now operating your business on your employees' money that you failed to remit to the IRS. You, in fact, stole your employees' money. More importantly, to the IRS, you have now taken what is really rightfully the IRS's. These employees sent this through the paycheck to the IRS to take care of their Social Security benefits someday, their Medicare benefits someday, their tax withholdings this year that they could get refunded in their tax return. Oh, the IRS is still going to make those refunds if they're due, even if you don't pay the taxes. But boy, they're going to come after you hard, and many other business owners really hard. This is a major point of emphasis right now with the IRS, is collecting payroll taxes, and specifically trust funds. So 2 things need to happen for you to fix this problem. 1, you need to resolve the payroll tax problem for the business, and 2, you need to resolve the trust fund liability and the civil penalty that'll hit your Social Security number should you not make a payment arrangement or do something to resolve the payroll tax problem. Here's what I recommend. Get together with a tax professional today, one who understands tax resolution, who knows the IRS collection division procedures, understands what options are available to you through payment plans or partial pay agreements, currently not collectible status, maybe settling even with the IRS for less than you owe through an offer in compromise, and to get the trust fund liability off of you personally so that it's not a criminal, but simply a civil penalty, and can get this put behind you so that you can move on with your life. I'm Jim Flauaus. If you found some value in this, if you found some information about payroll taxes that you didn't know about, please hit the like button and subscribe, because I'm going to continue to share with you tips on how to put your tax problem behind you. Thanks for watching this time. We'll see you next time.